First off, what do you make of the reaction from Asia to a very hawkish Fed?
Well, I think the policy transition is ongoing, and this year, clearly, the Federal Reserve will increase interest rates. And I think from that perspective, the shift in policy is creating some volatility in markets as we are seeing right now. But I think what's important is that growth and fundamentals are still fairly solid. So we might be in for a rough patch, but I think ultimately we should get out of it.
Okay, so vol, the name of the game. What do you do with your money? Where do you park it, James?
Well, at this stage, I think we continue to hold bullish positions in the US, Europe, and parts of Southeast Asia. We think that these areas can still grow above trend. But of course, we think that income can also be derived from some parts of the fixed income market, particularly in high yield. So I think that's going to be a stay invested, diversified story. And of course, alternative will be an important asset class for 2022.
James, give us a sense of, how things are evolving, though, because, you can't be having the same sort of strategy that you did 2 months ago. So what do you tell your clients?
Well, I think what's happening right now, we're witnessing, is that real rates are actually rising. And I think that's creating tightening financial conditions. And of course, investors have to shift within sectors. Clearly, technology sector will be affected by rising real rates, especially the tech sector that has the parts of the tech sector that derives very little earnings. And clearly, those that have run up a lot because of multiple expansion. So those will be affected by rising rates. And of course, in a rising rate environment, you want to be bullish on financials, which can actually do well. So I think it's going to be a sort of a barbell strategy between some growth stocks, but also you want to be increasingly positioned for value, which would do well in a rising rate environment.
Well, absolutely. And then you consider another part of the equation, and that may well be that we see growth, certainly economic growth, slowing down. And we've got a lot of stocks which are actually priced richly because of a high growth environment. Is it time to be reconsidering those positions?
Well, I think it's very important to look at areas which give you structural growth stories. Yes, to the short term, there are pockets of growth in various parts of the world. Southeast Asia is still experiencing a growth spurt. But of course, you want to look at the structural trends, particularly companies that are geared towards the digital as well as the sustainability revolution. And I think those long-term trends can continue to be very strong for 2022 and beyond.
The dollar is looking strong, the highest level in about a month. What assumptions are you making about the upside, and what does it mean for especially emerging market currencies in this part of the world?
Well, we think that the dollar could continue to become strong. There could be some mild appreciation in the dollar because this year is going to be a year of policy transition, especially for the US Federal Reserve. And of course, the US economy is very strong, and that's why the Federal Reserve is going to raise rates. But from that perspective, we don't think that a taper tantrum is likely to repeat itself, just like what happened back in 2013. So emerging markets, especially in Asia and especially in parts of Southeast Asia, is still fairly strong in terms of economic fundamentals and fairly robust. So from that perspective, we still see a mild dollar strength, but not likely to create that sort of volatility that we saw back in 2013 during the taper tantrum.
And the yuan to remain resilient amid all of this, currently down about 0.2%, James.
Well, I think the Chinese currency should still be fairly stable this year. China's growth momentum is actually slowing down, and it's clear that China's policymakers are on easing mode in terms of interest rates and monetary policy. So they want to support growth, and I think they should be able to do that. And from that perspective, the Chinese currency should actually stabilize going forward.